All right, hey guys, welcome back to another stream. Today we're going to be looking at SLV. This is the silver ETF. It's a $21 stock and it's got an implied and realized vol ratio of 1.14. So, first came across the stock on my daily scan. Let's take a look at the key metrics real quick. So we can see the implied 1 day move is 1.64%. It's realizing about that today. So if you sold earlier, you might have broken even today. But what we can see is that the implied volatility for the 30-day is 23.92 here. But our forecast is only 16.9. So this is interesting. We probably want to investigate this and see if we want to sell some options here. Right. Taking a look at the volatility and option volume time series here. What button do I press? This one. Yeah, we can see that the green implied volatility line just tends to be higher than the blue realized volatility line in general. And this tells us there's like a pretty good risk premium here, and option sellers just tend to make money over the long run. So, what can we do? Well, after I note down all the info in the notepad here, we can try to forecast what future volatility is going to look like and then see how big our edge looks. So, just going to write down some stuff so I don't forget. The price is 21 21.54 and the implied vol we're looking at is 23.92. So, we're going to try to forecast volatility and hope that it's going to be below 23.92, in which case we have a profitable trade. So our first forecast is the PA forecast of volatility. It takes a blend of implied and realized vols and just tries to estimate future vol based on that. So we're gonna write down 16.9 as our first estimate. Excuse me. Our second estimate is gonna be historical volatility. Because we know that vol tends to cluster, we can see that like past volatility just tends to kind of accurately guess where future volatility is, because other than maybe like a big event that makes stock prices move, like we can see in October or something like that, realized vol tends to stay pretty constant. And if we don't see any upcoming major event that'll move silver prices around, we can kind of expect the volatility to kind of remain around maybe like 21 ish if nothing else happens. So we can use historical vol as a forecast for future vol and just write that down as our other forecast, 2107. What we can also do is use implied volatility as our forecast. We know that implied vol is the market's kind of forecast of what future volatility looks like. But obviously, as you can see, the green line and the blue line is so different because the market doesn't get it right a lot of the time. There's usually a lot more buyers of options than sellers of options just because people want insurance, and sellers don't want to sell options if they're not going to make any money from it. So the we can say the equilibrium price, the market price for options just tends to be too expensive. If we take this out though, if we take this premium out though, we can have a pretty decent idea of what future vol is going to look like. So let's pop over to the relative value tab here. We're just going to plot silver for now, and we're going to look at the IV-RV ratio. So focusing on this graph here, we can see that implied vol just tends to be a little higher than realized vol on average. So this line is the implied vol divided by the realized vol. So anything above 1, it is a premium for option sellers. This premium is basically never below 1. Option sellers basically just always make money. Well, not always, obviously. There's going to be like a little small periods of time where it's not true, but over the long term, like option sellers are doing very well here. We can see that implied volatility is a 1.14 times the realized vol as of today, June 6th. What we can do though is if we take this premium out, this premium that the sellers always earn, then we can have a pretty decent idea of what realized vol is going to look like. So popping over to the key metrics here, is this, nope, this is not the right. Hey Plenty, how's it going? Let me see. I have a button for this somewhere. Let's see here. I have no idea, so I'm just going to show you the whole screen Twitch. You can see for the key metrics here, it's a little small. Let's try this again. There we go. We can see that the mean is 1.19 here, this figure here. So we know that on average, implied vol is about 19-20% higher than realized vol. So if we take that out, we can kind of get the market's estimate for realized vol. What we're going to do then is go back to the graph here. We can see that implied vol is 2391. If we take the 19% premium out, what do we get? Open up our calculator. 2392, we divide this by 119 and 2. We get about 20% vol. So that kind of tracks with like historical vol. I guess the market's just expecting, roughly 20% vol and then adding their usual premium on top. That kind of makes sense and kind of tracks from what we're seeing in the historical vol anyway. So we're gonna write this down, 20.06. We'll round this up to 20.07. Doesn't really matter too much. And yeah, we have our three forecasts based on historical volatility. We used the PA forecast, we used our historical volatility, and then we used the implied vol after taking out the premium. What we can do now is compare the implied vol with a similar stock, a correlated one, and see if we see anything suspiciously different. So, for example, if we have like Coke and Pepsi or something, and we see that Coke's implied vol is like significantly higher compared to Pepsi's, even though they're similar companies, then maybe Coke has some event coming up down the line that we don't know about, and that will tell us, hey, we want to do some more research. If the volatility of like Coke and Pepsi are about the same, then we can kind of assume that everything's normal, nothing really weird has happened, and life goes on, I guess. So, hey John, how's it going? Doing good, I hope. Yeah, I'm doing good. Nice. Alrighty. Um, we were just looking at SLV here. We've kind of established that there's a pretty decent risk premium, and yeah, based on historical data, we're thinking this looks pretty good. What we're gonna do now is go to the relative value part of the analysis. So we're gonna try to find a correlated stock. SLV is the silver ETF, right? So it kind of makes sense. Gold is like fairly correlated as well, since they're both like just precious metals in general. We can see that excuse me here. Gonna take a sip of water. We can see that the correlation between silver and gold is pretty high. It's usually around 80ish, never really below like 75. Right now it's about 78. That's pretty good. Looking at the price charts, yeah, that's pretty solid. If we see like a spike in gold prices or a spike in silver prices, we can see like the other stock will move as well. So this is going to be a pretty good comp. After graphing this though, we can see that the premium for gold and silver kind of move in tandem. If one is higher, the other one also tends to be high as well. So let's see, like on in February, March of 22, we can see that the premium shot up a lot, but both of them shot up. There's like a little bit of spread here, but other than that, like the the premiums for both tickers tend to be about the same, like throughout time, and we're seeing that here as well. We see that silver's premium is about 1.14 and gold is like 1.16. So basically the same. We can see that there's nothing here that would like give off alarm bells that hey, maybe something special is happening to silver or something like that. Um, let's see here. Yeah, there's honestly not a whole lot of analysis to do here. Like the implied vol premiums are all the same, so we can kind of just skip that and just go off of historical data for silver. But before we do that though, let's quickly see here. The current premium is 1.14. The average premium is, let's see. The average premium here is let me circle this for you guys on Twitch. About 119. So our risk premium is a little lower than normal, but I think it's still fine. I think it's still fine. This isn't gonna be some like alpha trade where we find like, a ton of mispricing, but we sell options here. We just make a little bit of money. We keep the lights on. We pay our bills. So that's what we're gonna do. We can try to price this out now though, after figuring out how big our edge is. So let's first take our three forecasts and average them, because each of them is gonna be like a fairly, inaccurate guess on its own. But if we average them, then hopefully the signal kind of shines through. And by averaging the forecast, we kind of take out any errors that these forecasts might have. So what we're gonna do is average 16.9, 21.07, and 20.07, and I'm gonna expect to see like 50 something. Yep, that's right. That tells me I haven't done anything wrong. and our average is 1934. So our forecast, I'm just going to write this down here, is about 1934. And I have used the hotkeys to enter buttons, so that's screwed up Twitch, but that's all right. That's all right. We're back. So we have an implied vol of 2392. We have a forecast vol of 1934. That tells us we have maybe about 4 points of edge when selling the options. So what we're gonna do is we're gonna turn that 4% in edge to actual dollars because that's what we really care about. The landlord doesn't accept percentage in, for rent, so I'm not gonna do that either. Let's see. SLV vol is 2154. Strike price. If it's 2154, do we think we can sell the 2150 straddle or the 21? I'm not sure. So let me open Thinkorswim really quick, and we're just gonna see how that looks. As always, Thinkorswim is installing updates, but that should be pretty fast. So let's hope it is fast. But we can enter all the other info for now. 2154 is the underlying price. We're gonna sell the what day is it today? Let's sell the July monthly. So third Friday of the month, July 21st. We got our implied vol of 2392. That's what we're at right now. And hopefully by now Thinkorswim is up and we should be able to see the strikes. Good thing about an SSD, so this is kind of fast. I can't imagine loading this on a hard drive. Anyway, we got SLV here. And yeah, this is gonna be hard for Twitch to see for now, but don't worry, you're not missing out on too much. 21 and a half, that is a strike. So we're gonna sell the 21 and a half. We plug that into the calculator, and what we get is our straddle price is about $1.44. Let's check in Thinkorswim to see if that's right. Let's see here. For the Julys, if we sell the straddle. Yeah, the mid price is $1.46. So we're 2 cents off. That's pretty good considering, the rounding and whatnot. So let's write down that the market price is $1.44. But that's implied vol, right? We disagree with this implied vol number. We think it should be lower. So what should the straddle actually be worth here? If we take all these same inputs, but we change the implied vol to where we think it should be, which is 1934, we find that the straddle should only be worth $1.16. So that's a forecasted price. And the forecast price is 116. Gives us an edge of $30, I want to say, $28. Because I can't do math, I'm going to use the calculator for it. And that is embarrassing, but that's all right. 144 minus 116. So we get like $28 of edge. Doesn't seem like a lot, but remember that silver is like a $20 stock. So what more can you expect, right? Let's see here. How much margin are we using for this? Just take a quick look. Portfolio margin uses about $400. Let's just kind of eyeball it and say like $1,500 in margin for like a Reg T account, and the calculator comes back out so we can see our return on margin. We got $28 of edge. We divide this by 1,500. We get about 1.8% in about a month and a bit. So yeah, that's decent for a risk premium trade. You're not gonna expect too much more than that. Let's maybe drop it down to like, I don't know, 20, 25 to be safe. What do you get? You get like, yeah, 1.5% in about, let's see here. Yeah, about a month and a half or so. So about 1% a month, I'd say. That's good enough. That's kind of what you get. Before we kind of put this trade on though, let's stress the position. Because there's no point in putting on a profitable position if you just blow up every time. So we've seen implied vol spike in March 6 from 25 to like 28 in a couple days. 26 to 28, yeah, 2%. Highest is like maybe to 31. So let's say like we fell asleep during like the worst recession of the decade or something like that, and then we say vol spikes by what, 5 points? Yeah, let's do that. And we see a drop from 22 to like 20. So like let's drop the stock by 10% and then increase the vols by 5% and see how that goes. obviously this is like not realistic. It's not gonna happen like ever. Well, not maybe not ever, but like it's highly unlikely to happen, right? But we do want to watch out for these worst case scenarios if we're gonna be good traders who want to pay bills and not blow up. So analyzing the trade here, I'm gonna increase the vols by 5%, which is already like ridiculous. And then I'm gonna, yep, the offsets are at 10%. So if you woke up tomorrow and let's say, I don't know what could possibly make silver prices drop. Like an asteroid full of silver like falls in like Iowa or something. Who knows? But like let's say silver price drops to like 1950 here, and the vol also goes up a bunch. You're down like $90. That's basically nothing, right? Yeah, like sure that's 3 times bigger than your edge, but like you're also not gonna like lose $90 in one day like this for the most part, right? So if this is your worst case scenario, it's pretty good. It's pretty good. I'm not gonna complain about that. So if your risk tolerance is maybe like $100 or more, definitely put on this trade if you got, well, I guess if you got nothing better to do. This is like a typical risk premium trade, right? It's not super great, but it'll do. And yeah, make 1% a month-ish on your margin. So yeah, I'm gonna probably put this on in my live account later after the stream and make a couple bucks. Yeah. Before we move on though, does anyone in Discord have any questions about this trade?
For example, to raise chip prices as much as 20%.
I guess not. That's all right. That's probably for the best. Everyone I'm assuming is like watching from work and like doesn't wanna let their boss know that they're slacking off, which is cool. I appreciate you guys tuning in. Um, all right, so that's it for silver. What we can do now is move on to earnings and forward vol. This is gonna be pretty fast since there's not too much research that needs to go into these. So what I'm gonna do is I'm gonna filter out some stuff. I'm gonna remove some stuff probably. Yeah, let me walk you through my scan. I'm looking for today's earnings with a price of $20 or more because penny stocks and stuff just can't really be traded super well. You don't want to have to put on like 10 straddles just to make like $3, right? And it looks like there is nothing today that's $20 or more and has enough option volume. So yeah, these are all super illiquid. You're not going to be able to trade these. I guess we just skip this today. That's all good. You know, some days are going to be better than others. Going to forward vol, we're going to look at clean data. We're going to look at the IV30 and the IV60. So the forward factor for 30 and 60 day. We're just going to look at that. Oh, and we want weeklies because we need to trade those sometimes. Okay, so clean data means that we don't have to worry about option volume, but let's set the price to 20 or above. We want weeklies with no events, and let's sort by forward factor. Let's see. The first two are healthcare. We don't want to trade those because those are probably like biotechs with like FDA announcements, and just I don't know anything about that. If you do, good for you. I don't know anything. Dollar Tree. Is this Dollar Tree? Yeah, Dollar Tree is the other one that looks pretty decent. The rest are kind of like meh, right? But we got a factor of 22% here. Let's look at the term structure. Ah, it's probably some earnings stuff. That's what it's telling me. So no, we got nothing for forward vol today either. So I guess today's just gonna be a slow day. You put on silver, nothing for earnings and forward vol, but that's all right because we scan it every day, and if we find something tomorrow, then we put it on. All right, that's all that Twitch gets to see. After this stream, I'm gonna be in the Discord, just talking about any other trades that our members find. If you want to be in on that alpha, definitely sign up for Predicting Alpha. The details should be in the description below. And yeah, I'm gonna sign off on Twitch. I'll see you guys Thursday.